everyone, it's Grace. Welcome back to my channel. It has been absolutely hectic and a lot of things have been happening in the news. So some of you may know that I'm actually attending as a full-time MBA student from the University of South Florida with a concentration in finance because I'm really passionate about this field. So I'm also very eager to share with you what has been going on in the news, what the data looks like, and also my take on those kind of events. So before we begin today's video, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. And please do consider contribute to my channel either through PayPal, Cash App, Zelle, or QuickPay. And I'll provide the links in the link tree in the description down below. Thank you so much for your support. All right, so for today's video, we are discussing whether the 2020 pandemic boom is over. And I have 6 reasons why I think they probably are. All right, so the first thing that we're going to look at is the famous headline CPI. So it just came out that the October 2020 CPI just came down to 7.7%. And actually, not many people understand what that means because inflation is still high, and then things are still kind of expensive, as you can tell from your day-to-day shopping and stuff like that. And also, there has been saying, consumers are cutting back on the Christmas spending, this and that. So one interesting that I want to point out is that the Fed actually doesn't really rely on the CPI to decide whether the Fed funds rate needs to be a little bit more aggressive or conservative. What it really looks at is the core PCE, which is now still at 5.1% as of September 2022. So that's still very far from the target 2%. And from this standpoint, I think that unfortunately, we're going to stay at a very high level in terms of the interest rate for for the next year or so, at least a year. That's my thinking. All right. So the second reason why the pandemic boom is over is because the housing price is in the middle of a correction or crash. For those of you who are already familiar with my channel, you know that I update on those data on a month-to-month basis. So I'm also going to provide a link to my Tableau and also my Wix site, so you can take a look at it by yourself. And I'm also going to update on the October data very soon, and so stay tuned on that as well. So as you can see on this graphic, what I want to show you is that the housing price is actually very negatively related to the mortgage rate. So the lower the mortgage rate, the higher the housing price, and the higher the mortgage rate, the lower the housing price. So there is a inverse relationship between the two. And as you can see in this graphic, and I think it's very telling, you can see that it's rising. The mortgage rate is rising so quickly, and now it's even higher than 7%. And that's a huge deal. When you're looking at this graphic from Freddie Mac, you can see that the 30-year fixed mortgage rate is actually higher than the level in the 2008 financial crisis. So I do think that has a huge impact on the housing market as well. But depending on different regions, the housing price is gonna correct on different pace. But what I do see is that it's gonna very quickly dial back to the 2020 pre-pandemic level. All right. So the third thing that I also want to share with you is actually the decreased mortgage application. That's also very related to the housing market in a whole. So in this graphic, it actually shows you the number of mortgage applications, and you can see it's actually at a more than 20-year low. So there are several key points here in history where the mortgage rate rises to the top and the number of mortgage applications actually drop to the bottom. And so this is a very telling sign that the housing value is is depreciating or devaluing, or the bubble is bursting very, very quickly. And it is very hard to predict in the short term what it's going to happen. But I will try my best to do a forecast that is consistent with the Fed's policy and also reflect the geological features in each of those important metro housing markets. All right, so the fourth thing that I think the pandemic boom is over, and everybody should be aware of this, is the crypto crash. All right, so what I've been hearing about in news, like everybody's talking, is, oh, the FTX is like bankrupt, is going bankrupt, and Binance is like dropping out of the deal to acquire FTX. And I just wonder, like, how many other exchanges out there are actually either filing bankruptcy or, you know, just evaporated overnight. And this is like mind-boggling. So on one side, I'm hearing people say, you know, we love decentralized, right? Because there is a lack of organization, or there is no such thing as an authority that everybody reports to. And we love the anonymity feature of crypto and this and that. And then when the market drops to the bottom, like we're seeing right now, people will come out and say something totally different. They say, we need regulation. How is regulation not in place? FTX claims that it has like this amount of asset, right? Or this amount of reserve. But when it files for bankruptcy, it literally has nothing. So I understand the importance and innovation of decentralization, but that doesn't necessarily mean that regulation should not be in place, because people are still putting their hard-earned money into the market, hoping to get some kind of return. So I do think that you know, this kind of conflict, it doesn't really excuse for the lack of regulation in decentralization and crypto. Right. So this graphic here can also show you a lot. You know, about like the Bitcoin has like increased to like close to $70,000 as of last November, but now it's like crashing down to less than 20,000. I mean, it's still holding up there, but I don't think that it has bottomed out yet, because we have not seen the peak point of the Fed funds rate. So unless we get to that point, I think that it's not bottomed out, and there's still some crashing space for it to go down to the bottom. All right. And then the next reason we're actually dialing back is because of the softening labor market. I'm sure everybody knows that the labor market is softening so quickly. And like in November alone, we're hearing massive tech layoffs, right? From Meta to Twitter to Lyft. So all these tech companies, either they're somewhat involved in the real economy, or, you know, not in a real economy, in the internet economy as a whole. They're all adopting the same strategy to lay off people. And that is very concerning. So it does tell something important. That is, the asset price and also the company valuations are really bubbled too much. It's overvalued, and it should not have been that high just based on market speculation and not based on real market demand. So what we're seeing now, and in this graphic, you can see that the non-farm jobs from the end of last year to now, it's actually on a decreasing trend, right? So that is a very telling sign. That's also almost inversely related to the Fed funds rate as well. So the higher the Fed funds rate, the lower the number of available jobs. And I hope that the Fed knows what it's doing and be able to control the direction of the economic developments a little bit more. All right, so as we can see, the last thing that's related to the softening labor market is actually the work from home trend. And personally, I think that, you know, the pandemic boom is over, and then work from home, it is a model that's worked very well for both employees and employers during the pandemic. But right now because of the softening labor market, and I don't think that it's a popular, it's gonna stay forever, or it's gonna, just be there forever. All right, so I'm gonna show you another graphic. So this one, it shows that, the work from home trend, it's still kind of in there when you compare to, say, January of 2020, right? Because there are still some kind of concern that people need to keep a safe and healthy distance, physical distance from each other. However, as we see the labor market gets a little bit softened, and also the unemployment rate increase more, I think that this trend is gonna go down even further. What do you think? So that's just my take. And so that is pretty much the 6 reasons why I think that the pandemic boom is over. I hope you enjoyed today's video. And I also want to share more with you about the forecast and also on the data analytics side a little bit more in my next video. All right. Thank you so much for watching, and I'll see you on the next one.